Hello, traders, and welcome to the first NFP of 2019. We'll make sure to make this one count. It's gonna be awesome. I do see some patterns here. Will be sharing with you guys my charts on technical analysis, obviously on Elliott Wave. I am the Elliott Wave Jedi. That's what I do, right? Charting is my game. So, what we're gonna do today is we're going to take a look at the NFP, the non-farm payrolls release. It is an economic indicator. We'll expand more on that. Okay, there we go. We're live. Basically, what this webinar will be all about is we're going to be examining the fundamental side with the releases, and then we're gonna take a look at the charts. I'm gonna be hanging around here with you guys. So the release will take place in 26 minutes. Um, I'm going to stay with you guys here during the release. So obviously, prior to the release, during the release, and after. Okay, because after that, whoever is inside the actual webinar, the whoever is registered, not only that they can interact with the questions and all these things, but I will be giving you guys a treat. You're in for a treat there. I will be sharing some exclusive insights in regards to the major question, and I'm gonna hold this topic for later. Are we in a market crash sequence or not? Yes or not? Are we in a market crash? Or is this a recession, a depression, or what is it, right? Is it going to stop? Is the bull market going to return? This type of things, right? I'm going to share with you guys my personal opinion in regards to that. But, before we do that, I'd like to, let's say for instance, we're going to take a look at the chart just a little bit later on. But obviously, before we do that, I like to make things clear. Obviously, this session is being recorded. Not only that, so for later viewing, if you missed it, or let's say if you guys are live on YouTube and Facebook, this is obviously streamed on multiple channels. There are timestamps available for the recording, so if you want to watch it later on, you will be able to do that. What else? Questions. Obviously, I will be taking questions exclusively for the ones who are registered inside the room in the webinar itself. And yeah, what about the before we actually go jump on the charts, I'd like to disclose the fact that everything that I'm about to say is not designed to induce or influence you in any way, and all my views are to be treated as simple market commentary and not as an investment advice. Thank you very much for understanding, and what I'm going to do now is we're going to jump together on the charts. So now you see me, now you don't. Oh, I'm over here. Okay, there we go. Pretty neat. Okay, so listen, guys, I'm on the dollar index here on the 2-hour chart, and what I'm actually noticing is I'm noticing something interesting, right? This seems to me like it's a corrective pattern, but it is complicated because it can work in both ways. What I mean by that is the following thing. This pattern can look like this, just like I'm labeling it in a running flat, which could represent further weakness ahead. Okay. However, there is a different way of looking at things. If this move actually started from here and this should have, like let's say for instance, in an expanding flat type of structure, then this would point for more upside. Okay, so this is what I'm trying to say right here. This NFP is crucial. It is important um, for the next month, let's say. So this month will I personally believe this month could this NFP could dictate the next trends for this month at least. Okay, so it is kind of important. So what we're going to do is we're going to jump on the actual charts there. Okay, before I do that, just want to do a little bit of something right here and just close all these things. Okay, not you, to you, yes, and you. Okay, all right. So there we go. Now, okay, just make this. Okay, the software is it needs a bit of looking into it. Okay, so on this on the economic calendar, right? Now, before we just I mean, before the release is done, so it's gonna the release will take place in around let's say 20 minutes, something like that. Yeah. Now, before we do that, I'd like to explain for those of you who don't know what the NFP is, what the non-farm payrolls release is. It basically reflects the number of jobs added in the previous month for the government sector, excluding the farming industry. So, basically, it is an economic indicator. It represents, it actually tells how healthy the economy is. When jobs are added, obviously people are gaining confidence, then spend, they contribute to the economy, etc. Okay, so it's practically a good indicator for the health, overall health of economic activity for that specific country. And we're talking about the USA, let's say the America, let's say. So the US dollar is indeed in focus, and it will, let's say, this release actually affects the US dollar, but not only that, it affects obviously the currency pairs with the US, which would actually contain the US dollar to keep it simple, right? Counter pairs and so on, counter currencies. So the forecast for this NFP is 170K. Now, the previous was 155K. We know that was, let's say, a bit of a disappointment, mixed data with a bearish sentiment around it, right? But now let's say the forecast is 170K. So it's pretty much a little bit, the sentiment is a bit bullish on this. Now, participation rate 62.8 versus the previous 62.9, so pretty much a little bit like, let's say, flat. But the average hourly earnings, this is important, okay? When the wage is higher, then obviously people have much more money to spend, right? And confidence kicks in. Therefore, bullishness towards the US dollar. And we can notice that the um, previous data was 0.2%. So now they're forecasting 0.4. So it's an increase, it's a projection of an increase of 0.2%. So it is kind of bullish. So we have two bullish aspects until now. Now, the next focus would be the unemployment rate, which is expected to remain flat at 3.7%. So as you guys can actually see, the sentiment around this is, seems to be bullish, right? So the only question is it going to be like this, or are we going to have some sort of mixed data or a major disappointment? This figure is not coming true, and the dollar just tumbles. Well, let's take a look at the charts for that. So what I'm going to do prior to this release, what I'm going to do is I'm going to go on some currency pairs, FX majors. I'm going to we're going to take a look together on the indices and also on metals and take a look at the energy, let's say the crude oil, right? WTI. So let's kick things off here with the dollar index. Let me just jump on, do something right here. Okay, now okay, just give me guys a second. Boom. Okay, dollar index on the daily time frame. Okay, what I want to do is show you guys something here. Okay, now I've been previously bearish on this, and you guys can actually see that possible bearish sequence has indeed, potentially it has started. So all it needs is to break this low to be in actual danger. And there, it actually broke some trend lines there. So it is a bit, let's say, concerning for the US dollar, which is not concerning to me because obviously I've been looking at this structure and it's been very complicated. It's been a journey with this US dollar in 2018, I was able to successfully forecast the US indices drop, the rise of precious metals, the drop of the WTI of crude oil. But the dollar gained strength when the volatility hit, and also the volatility spike, which I've been, screaming about for the past 6 months. I mean, at least half a year, half of 2018, right? And then when it happened, everybody freaked out. Yeah. Now, the only thing is, what I'm trying to say is that the dollar gains strength or remains stable as a safe haven asset, being treated as a safe haven asset when it hit the fan, right? So when it happened. So right now, as the indices have dropped and as gold and silver they rose and all that, I believe that there is time for something to change, possibly trends, right? Allow me to explain what I mean by that. So if I just explain to you guys this structure, as you can see, I mean, with a naked eye, I mean, even without all these fancy indicators and so all that, right, labels and stuff, you guys can actually see that the divergences right there, right? This is point number one. Point number two, this structure kind of looks like a potential double free within this X intermediate degree. I know some of you guys are not so, let's say, literate or comfortable or knowledgeable when it comes to elite wave labels and all that. Will do my best to keep it as simple as possible. Okay, so yeah, now what I'm trying to say is that this potential double free structure can resemble an expanding flat in this type of correction, which would be turquoise primary B, following the five wave sequence on this, right? Now, the way I've been able to somewhat have an idea, and I've done this multiple times in previous videos and also during the live webinar, previous FOMC in December, on December 19th, um, by using a fractal let's say fractal pattern. This pattern right here kind of resembles this one, right? And allow me to display what I mean by that. So what I'm going to do is I'm just going to clone this one. Okay, let's take the entire thing. I'm going to clone this one, and what I'm going to do is I'm going to place it here, okay, and show you guys a magic trick. Now let's squeeze it up a little bit. Okay, there we go. I'm going to move it up and show you guys something. Now previously we had drop, rise, drop, rise, drop, rise. This rise has been pretty big, right? Then we had, I mean, now we in this structure is we have drop, rise, drop, rise, drop, rise, right? So far so good. Then we had a drop, rise, drop, drop, rise, drop. What's next? Okay, I do have an idea what's next. I just need a potential confirmation. And what I'm saying is that this NFP can provide that, because I've done this on the USD yen and it crashed. You guys can actually see this. Go on the Orbex blog and see the previous video I did, and the same thing like I did on the dollar index. I'm going to show it to you right here in this pattern, right? Took it from here, yeah, and placed it here. That's all I did. Okay. Oh, no, anyway, I had the labels as well, right? But you can actually see rise, drop, and then the triangle. Rise, drop, and then the triangle. This is how I knew that this thing could actually deliver one more, and it did. The only question is, what type of structure is it, right? Does it have more upside? I do believe personally, yes. But is it ready now? I don't know. We will actually see. I believe that the yen, and I've said this before, that the yen could gain a lot of strength. It already did. I'm satisfied with what I got. Now I'm looking at the volumes, and there is no clear divergence yet. Okay, so this kind of tells me that this thing could be a fourth wave, maybe deliver one more drop for the divergence to kick in, right? The only question is, I mean, the right question would be, is it ready to do that now on this NFP, or is it going to wait, or is it going straight up? All scenarios are possible, but what we will do is we will exclude the ones which gradually become invalidated. Yeah. So that's basically a view on the US dollar. Now going on the 2 hour chart, the US dollar actually shows me after that's a specific sequence. So let's say for instance the way I'm labeling it is a 5 wave sequence in wave A, this minute blue, and then a running flat in this corrective P, and a drop in the C wave, basically having a minor red A. And right after that, following that, of course, I have basically labeled here a corrective structure W and then X and Y in also a running flat. Okay, so let's say for instance, the way it unfolded previously around here, I mean this one can resemble this one, right? But on a larger time frame, fractal by nature and so on. They do repeat themselves, guys. I mean, fractals, what they represent is they are self-repetitive patterns, reoccurring patterns. They happen gradually and expand over time as well. Naturally growing fractals, patterns that resemble one another. They happen then and they happen again and so on. Now, following that correction, let's say for instance, let's pretend that it is a correction. We do have a 5 wave sequence on the downside, which of course could give a rise in a second wave. Now, if that's true, the second wave should resemble a either sharp correction or a zigzag, right? To be treated as a second wave. So that of course can be measured with the Fibonacci retracements, and the 61.8 reading uh, should provide a resistance if this is a second wave and if the dollar is actually poised for more downside and an aggressive sell-off. Now, I'm not saying it's gonna do that. I'm not here to do that for you guys. What I'm here to do is to assist you with your trading decisions. Okay. Now, this is basically what I'm seeing for the dollar index. Now, I'm going to take them gradually. Let's say for instance we have 9 minutes left, so let's just jump on the metals on gold right here. And you guys know my views. I've been riding this entire bull trend, bullish sequence, this bullish trend. So yeah, I've been also posting these things I mean, over and over again. Yeah, but the daily structure for gold. And by the way, this is where I started being bullish, being bullish, being bullish, again bullish. You see, so I was on top of it. I knew what's basically about to what could actually occur. Now what I'm seeing is a potential end of the third wave soon, okay, and probably a correction commencing. So gold shows me a potential correction coming. Silver, kind of the same thing, right? Let me just adjust this thing. It went to the 200% instead of 161.8, which is good, right? Which means that wave 4 can be limited until there, and the 261.8 could be actually the trigger for free. See how this is easy this is if you know fibs? Yeah. So the point is that both of them are showing the same directions, right? And the way I'm labeling them, obviously, if I go back on the gold chart, I do see this as a potential corrective sequence and not as a bullish impulse. Not yet. It has to prove it, right? By what I mean by that is this weekly trend line. This trend line, guys, represents the December 2016 low before the bull trend, bullish. It's also a corrective pattern, by the way. Before the bullish sequence started, yeah, so on December 2016 and on December 2015. So it's a weekly trend line, which has been broken obviously in July 2018. Ever since then, I mean, what gold was actually doing, and hence the reason why, after a breakout, major breakout like this, usually price action goes for a retest, right? Which is what it's doing right now. So it broke the trend line, and now it's coming back for a retest, right? And now what I'm seeing is potentially bumping its head into this 61.8 of that entire bearish trend, the vibration zone, also the phi zone, if you guys know golden ratio and fibs, but it is kind of tricky, right? So let's jump on the 2-hour chart back there, okay, on the gold, yeah, XAU USD. And what I'm noticing is potential ending diagonal in this small minute degree free third wave black. So minute black free and potential retracement until 38.2. The divergence is not really there yet. Okay, I do believe that wave 5 could provide a divergence. So the sequence could be, let's say, for instance, wave 4, wave 5, and then something larger as a retracement, a bit larger. But the sequence, in my opinion, for gold could still be bullish, right? So next it's would be silver, and I'm gonna jump on the FX majors right after that. Silver, same sequence in an extension. In this case, the free of freeze actually contains this extension, which actually occurred. Okay, and what I'm seeing is, let's say for instance, potential end at the 161.8 of this. Yeah, potentially wave 5 could end around 200%, which is 1605. Now, it is showing a resistance around 15.76, and the sequence could be a bit bearish right here temporarily, and it has to, I mean, for more upside, the sequence should look something like this. Okay, now remember, we had a sharp correction in wave 2, and for the law of alternation to kick in, what we need is a complex pattern right here, so that these corrections could alternate one another in their complexity. That's how the structures work, that's how the market works, that's how the Elliott wave sequence unfolds as well. Next, it's crude oil. Right now, to be honest with you, I did my part. I mean, this drop was, you know, lower than I expected, to be honest with you, but it did drop like a rock. So on the bottom right here, we do have a divergence. Uh, Volumes, I mean, they did start to pick up. The only question that I'm having is this a 1, 2, and then 1, 2, and then this is extending? Because if so, this should be the free of free, and the crude oil should just like shoot, I mean, rally, okay? Or is this pattern just one corrective pattern like this in a C wave ending diagonal, reaching its top right here before much more downside? Looking back on what happened with the VIX, the volatility index spike, indices actually dropped, and what I've noticed that crude oil dropped a lot during it as well. Okay, so it's all about having a one more look at the VIX. Now the VIX hasn't, I mean, even though this could be treated as one more, right? I mean, a corrective pattern, yeah. For this to become invalidated, it has to break this potential channel, right? Has to break this and then do something like this right here as a correction. So the correction has to be rising right here, small one, to possibly confirm that there's more downside, so I can regain my confidence in the indices, US indices, and um, DAX, so on, all of them. However, structures, let's say for instance, I'm on the DAX chart here on the 2-hour chart. potentially there could be more downside. Briefing you guys up, I do see this as one more possible bullish move before more downside could occur. The only question is if this changes, right? If the structures do change and I will be able to see this something like this here on Dow Jones, then I will let's say consider maybe a new all-time high, maybe the last fifth leg of the bull market, and then the major financial collapse or something like that. Um, I don't want to pronounce it yet. We'll take a look at them. We'll examine them, the right way. We'll expand more on them. Let me just finish things off here because we have 1 more minute until the release, and I do want to be there. Okay, let's say, yep, okay, 50 seconds. Let's just do a Euro USD in the 50 second. Now, the way I'm seeing this is in a potential corrective pattern, second wave, and then probably rising, okay? Under no circumstance should it go lower than 1.3093 or 1.13093, okay? Because that's the validation for this second wave, okay? Let's just take a look at the release and see. Notice that there was a lot of volatility going on right there, and the CAD has releases right here. I was bearish previously on the USD CAD, and I would like to could possibly confirm that downtrend that I'm seeing. So yeah, we're just gonna wait for the release, guys. In the meantime, if you do guys have any questions there, please feel free. All right, so major surprise right there, extraordinary data um, on the let's say jobs added, 312K versus 170K. So this should be amazing, right? Average hourly earnings came in as expected, 0.4%. Okay, let's take a look at the unemployment rate dropped. Okay, so 3 point actually rose, sorry, rose 3.9%. Right? This could uh, this could wipe out all this bullish sentiment for the jobs added, right? Unemployment rate increased. Where's the inflation? I don't know. It just doesn't want to um, be there, right? So at this very moment, money is being injected in the market, right? People are actually trading. Their investors are most likely digesting the data. So hence the reason for the volatility behind all these moves. So what I'm saying is that um, as this data is being digested, I basically share with you my personal opinion so far. So let's see if this is indeed um, a five-wave sequence and this bullish view on the Euro USD would actually unfold. Now, obviously, an invalidation for that I just said could be 1.307. Let's say, yeah, 1.1307, 1.1307 again, yeah. So that would be my invalidation for this wave 2, because the wave 2 must not reach beyond the start of wave 1. That's one of the um, you know Rose Elliott wave, sorry, Ralph Nelson Elliott placed on this tombstone, right? So the point is, this correction should be sharp, as I said, zigzag, or a sharp correction. Uh, Rarely a wave 2 would have a complex structure, so if it starts going on sideways, not good. Okay, I wouldn't see it as a good thing that could actually happen. Now, moving along for the let's say pound US dollar. Okay, now this thing has somewhat of a bullish sequence into it, even though it actually fell previously. And this, 2 days ago, the flash mini flash crash and something like that, right, for the Forex market. Um, I do see a correction possibly coming for the GBP USD, and then more rise, and then we'll actually see what's gonna happen next. What bothers me is this bearish volume's persistent, and looks like it kind of wants to make one even more low and then give the divergence. So yeah, but there is something that I would like to show you, and that I can display on the Euro USD. I mean, previously the low was here, and the higher low was there, but the volumes show the opposite thing: lower high and lower low. Yeah, which means that it's a divergence. I mean, price actions show prices. I mean, the structure rising while the volumes are declining. So this is, I mean, you guys can call it however you want to call it. It has different names: hidden bullish divergence, reversed bullish divergence, um, or yeah, so something like that. But it is a divergence, a bullish divergence. Yeah, could be used. So it can add up to how I'm actually labeling this thing. So I would I would like to see some let's say profit taking on the US dollar. I do believe it's time. It's been going up for an entire year. That's a full cycle or time scale base, you know. So yeah. Now moving on to the USD yen, and this actually dropped as per my previous comments right there at the top. Yeah, when I was present all over again, right? So you guys can actually notice these things. Now, it did drop. The way I'm labeling it is in a 1, 2, and then the extension, basically the massive sell-off, and the surprise, which was the um, flash crash recently, which recently happened, right? For I mean, yen gaining strength. This is obviously market uncertainty and people returning to, I mean, turning their focus towards the yen as a safe haven asset and metals. Classic. So yeah, after the US indices, I mean all indices actually globally, the sell-offs. So I do see potentially more weakness ahead, but because of these volumes, to be honest with you, this could give a divergence later on as the final piece. So um, the USD JPY could actually do that. Now, USD Swiss, the way I'm seeing Swiss is in a potential, and this can change, this structure can change in a potential, um, let's say, triangle, double free with a triangle in the last structure as a triangle in the Y as a termination point. So WXY in this B wave, so A, B, and then C, but this structure is very complex. Also a double free within the intermediate X of double free over larger degree. It is very complex, this one. So yeah, it's basically what I'm trying to say is that multiple corrective structures are occurring right here, and they obviously correct one another, hence the reason and behind their complexity. I mean, that's the reason for the complexity behind them. So yeah, I do have two, let's say, 2 points right here, resistance and support, which are 0.99200 and 0.98400. Yeah, for these two, if you can see it right here on the actual chart. So we'll see which ones would actually hold. Yeah. Now, obviously, in this type of structure, a break of the upper upper trend line of the descending triangle, descending channel, sorry, must not really occur because it could gain support for more upside, right? But a drop or and the I mean breach of this and a return point towards the support could provide more downside. So as you can see, the dollar could be positioning itself with these data and with more upcoming data for something else. Now, the AUD USD, let's say had a drop, a massive one. NZD as well, the Kiwi, but the Aussie retraced the whole thing, all of it, swallowed the whole thing in let's say 1 day. So that makes me wonder, right? Um, because what I could see is a corrective wave two possibly happening here as a zigzag. I mean, not something sideways like this, not something complex, just I mean, something very simple, yeah, as a zigzag, and then possibly much more upside. So the only question is, has the dollar hit the top? That's right. That's a good question. Personally, I'm inclined to think yes, but you guys are grown up. You can make your own decisions. So basically, what I'm trying to say is that the NZD as well. Let's say, for instance, the could agree. The 2-hour chart shows me. Obviously I'm labeling this complex structure in this intermediate B turquoise, intermediate degree in a descending channel, right? But the sequence of it looks corrective. So I'm labeling it as a corrective structure. Now, what I do need is a breach to possibly confirm this thing. I mean, it could go even a lot, but let's just stick with this. The point is that what I would like to see is a breach after this correction, of course, around the 5061.8 to see basically how the structure would look. Now, I would like to see a zigzag, obviously, because remember, guys, if the trend is indeed changing, the trend should change with 5 waves in the direction of a previous trend and start with 5 waves in the direction of the actual trend that changes, right? So in this case, 5 waves down, 5 waves up, which we do have. Now what I do need is a zigzag right here, a simple correction, either an ABC or a simple flat, or I don't know, but I would be comfortable with a zigzag or a sharp correction. Honestly, with a zigzag, I would be more comfortable because a zigzag usually occurs in the struggle point. Because what's happening, let's say for instance, in a wave one, in a wave one position, what usually happens, wave one is usually choppy, and I'm going to tell you exactly why that actually happens. People not really, they don't really, they're not really aware that the trend is changing, right? That's hence the reason for the choppy look behind it. But wave two represents a retest of that because let's say for instance, this was the previous downtrend, yeah, and what could actually, I mean, what wave 2 represents is um, the countering side's power, right? So hence the reason for the sharp correction behind the pattern. So sharp correction of that a little bit, and then boom, zigzag, right? If I do see this type of simple free wave move, a simple ABC move, to be more like my precise, yeah, that would be good to see. Now, a possible opportunity. I mean, I could actually have two. I told you guys that if you would stick until the end, we'll give you guys some things. But in the meantime, just gonna see if we have some some questions. But need you guys to hold off with me here. There we go. Okay, USD CAD. Okay, we'll get another screen for these things, guys. You're welcome, Georgia. Okay, okay, cool. All right, we'll go as per your request on the USD CAD. It would be nice. I do have something to share with you guys. Okay, now before we do that, we'd like to take a look at the Euro GBP because I believe that this might be an opportunity. Simply put. Now, the way I'm labeling it is in a corrective structure as per this red B wave intermediate degree and running flat. let's say an ABC right here, but with the ending diagonal in the C wave, which happens to take place within a rising channel, right? In which all waves, I mean, this is a motive wave, it is an ending diagonal, so it's not an impulse, it's not like a five-wave sequence with five-wave sequences within each impulse, no. It is actually, I mean, a diagonal is actually formed out of free waves within which so ABCs or the ABC moves within each wave. So this the sequence is free, 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 right? So free, 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 which we exactly have right now. And a divergence could be present right here, which can only mean one thing. If the Euro GBP drops, obviously the euro could become weak. But if that happens, then the GBP USD becomes weak. And what I've noticed is that when the pound US dollar becomes strong, the euro GBP drops, even though the euro USD goes up. Yeah. Hmm. So all this setup needs is a potential breach of this trend line and then a returning point for this. But you guys know my views. I was on top of this all over again. So um, these levels were disclosed long time ago. So yeah, now the next thing, Euro JPY, GBP JPY. Honestly, mm, you know, I don't have a clear picture on this. I'm gonna be honest, and the reason behind that is because I can't really correlate them with the USD yen because I see the USD yen possibly continuing. If not, then the USD yen has reached its bottom, and really, I need more. Um, I need more on these two. I need more, let's say, more time, more candles, more sequences to actually see what's it doing, right? Not saying that I didn't know it could reverse on the downside, right? I mean, if you guys check my previous work, let me just okay. If you guys check my previous work, you guys might notice how how this thing actually unfolded, right? I mean, drop and then again at these levels. So, yeah, I don't know. Is it going to reverse on the upside? These days, the Forex market is quite dodgy, right? So, trying to not to go all in on that, right? I mean, full speed. Okay, so let's just continue with the USD CAD, obviously. And on the previous NFP, I've been, let's say, I've been bearish on this, right? But then something happened, right? An extension. I mean, it did drop on the NFP, no problem whatsoever, right? But then it did have this overshoot in extension. Decided to make this the instead of 61.8, decided to make it 100% to match it as an ABC. So AB equals CD type of pattern. If you want to, let's say, for instance, use this type of harmonics, let's say, right? So these type of patterns. Now the structure seems to be complete. The divergence is around, I mean, is there. So could this be the start of a downtrend? Because as I previously said, that could actually happen before. I said before this. Now, if this is a downtrend, then we could be, I mean, the USD CAD could be poised for at least 2000 pips on the downside. Maybe 1500, but still downtrend. I mean a C wave. I mean maybe an ABC move, but basically a sell-off. Yeah. If that happens, then this means that the crude oil could either the USD would become very weak, or the um, crude oil could revive itself and continue a bullish trend. Either that or both. Okay, so I do believe it's about time, right? And we can see it on the larger scale. this pattern, and then. So all remains to be seen. As per usual, I mean, this could be, if this is a big wave like that, needs to, let's say, for instance, possibly retest this and then provide a bullish correction in a zigzag until the most probable 61.8 before any downside, re-entering this, bumping its head, and then boom, right? I mean, the actual trend. So maybe the rally, possible rally of crude oil, right? Speaking of crude oil, let's just jump on crude oil, right? Because as I said, if um, crude oil will rise like that, then the USD CAD obviously will could actually drop, right? So what I'm wondering is, could we actually confirm a bull trend, the next uh, trend being bullish on the WTI on crude oil? Maybe, but it has to do one thing. It has to shoot on the upside, right? Um, so yeah, I will continue right now. Let's say, for instance, with the uh, DAX, yeah, with the GRX. As you guys can see, I never moved any arrows or some stuff like that. Yeah, so I did go on the upside right here with this. So just double checking the dollar index, what it's doing right now. You guys can see, right? Yeah, it is happening. Will this move be sustained, right? Well, the 61.8 should tell something, right? If it's gonna hold or if it's gonna breach it, and then all this, I mean, becomes a little bit more complicated in a sense that the dollar could actually um, could make this, I mean, could make this as the entire structure, kind of tricked all of it, and then just goes up one more, and then it happens. Kind of complicated to actually think like that, but it is possible. But this would actually um, this would actually mean that the Euro USD would not deliver anything anymore, and it's just like a steaming train, a falling rock, and just going, I mean, tumbling down, right? Possibly filling up the French elections gap. Is it like that desperate to go down like that? I mean, I don't know, right? It does have a resistance right there as per this supports that I'm displaying right here. So, and resistances, but it could surprise. As I said, let's say if I do see 1.130, kind of dangerous, you know. I mean, just simply doesn't want to. I mean, I was bullish on this. It did go up. I was bullish here. It did go like slightly up. I mean, it started making a mess right here. I was bullish again. It started going up. I mean, when? You know, it simply doesn't want to until it does. So this is not the time to say, okay, euro is not gonna go up anymore. We don't know that yet. Okay. So what I'm saying that it needs just a little bit more patience, even though the dollar is going up right now. This could be just the correction of this. Okay, as I said, must not really reach a lower point than the previous local low. So as long as it holds, then there's still hope for the Euro USD, and all these structures that I previously shown you do point towards the possibility of the dollar getting uh, softer rather soon. Not saying now, as per the um, arrows which I'm actually pointing, seems to me like I was on the right side um, with the actual release. So in a way, I combined the fundamental points with the technical part. And yeah, I was able to successfully um, predict this NFP. But you know what? I've done this with every NFP for Orbex, all of them. Check it out. They're like the recordings can be actually viewed. Not saying that I'm bumping my feathers here or something like that, but um, what I'm trying to say is that uh, I actually started the year nicely. So I hope you guys did as well, because otherwise you wouldn't be here, okay, with me. So let me just load the questions right here. You guys have any questions, please go right there. Yeah, unfortunately, I don't speak Russian, so there is somebody commenting on in Russian, so I'm sorry, but will not be able to do that. So let's actually continue with the US indices, right? So Dow Jones, as you can see from the arrow pointing on the upside for possible more upside, and then the return point, right? And I'm going to show you guys something. Now, if the VIX, let's say for instance, if the VIX does indeed continue towards the upside, then, well, as you can see from this structure, this could be a channel which could represent an extension, in this case on the upside, which in this case would mean an extension for the downside on the indices, which means that this is not a mere correction for the indices. And as I said, I'm not in the mood for a major contraction that will last for like at least half a year or 1 year or even more if it's like dramatic. I'm really not in the mood for a flash crash or market crash or something like that. I mean, a flash crash maybe. I was previously. By the way, in February 2018, I was able to successfully um, forecast this rise with some videos and stuff that I did, but also, with Orbex traders actually um, were actually updated on these views, right? Let's say in September, yeah, and right in October when it really spiked. So at the end of November and beginning of October, November and October and so on, right? So many opportunities. Now, what I'm saying is that it could deliver on the upside one more, and if that happens, then it's bad news. Bad news for the stocks, bad news for indices, bad, bad, bad. Okay, allow me to demonstrate what I mean on the higher time frames. Okay, because DAX, let's say for instance DAX, right? If this was supposed to be let's say a sequence like that. Um, by the way, the April 2015 high with the February 2016 low, I'm labeling it in the correction, and then a bullish sequence. However, this sequence can pass as an ending diagonal, and there's something interesting happening right here, right? Let's say, for instance, if this was a 1-2, even though I wouldn't agree with a complex structure like this in a wave 2, remember when I said about the zigzag? Yeah, well, uh, this sequence looks like an ABC, okay? Now, the other thing is that if this wave 1, then why is wave 4 interacting with it, right? Overlapping with it. Plus, wave 4 took a vast amount of time to develop. So I'm thinking to reassess. I mean, I got what I wanted. Don't worry. I mean, I was able to. I mean, previously, let's say for instance, May 2017, call the drop. Then later on, after the drop, call the rise. Then prepare for the drop. Then here I was able to successfully make some contents for the drop in February, right? Just as I said. Then the rise, then the drop, then the drop, then the drop, and again and again and again and again and again, right? What is it gonna do now? DAX. I was on top of DAX. The only thing is that because this wave, the way it's labeled, wave 4, obviously hit the vibration zone 61.8, right? Because this is overlapping with this wave. Cannot really pass as 1, 2, 3, 4, 5 anymore as five-way sequence. Instead, uh, it can pass as something else, but this bullish move on the upside kind of diminishes things. Okay, allow me to demonstrate what I mean by that. Instead of this free of a cycle degree, this could actually end a wave 3 of a supercycle scale, which means that this is a wave 4 of a supercycle scale, which means that wave 4 should retrace in the previous price action territory of a wave 4 of a lesser degree, which, I mean, let's say for instance this wave 5 to be here, and this is not a C. Anyway, I'm going to put it, but you get the picture, right? And then this correction should end around here, at this bottoms, previous bottoms, around, which means that more downside could actually occur for this thing in time. Not saying that it's not gonna really, I mean, bounce off within this channel or something like that, but it needs to be a little bit, let's say for instance, monitored, right? Because there are a lot of patterns here, and it's like corrective over corrective. It's a real big mess right here, and it can only be corrective. Okay. I mean, however, this thing, even if it's an ABC or WXY or something like that, yeah, I'm labeling it as an ABC, so W, X, A, B. This is the point. Five-wave sequence right here. 1, 2. But what if an extension takes place? 1, 2, yeah? Uh, Actually, no, 1 second. 1, 2, 3, 4, 5. So 1. Then this is the 2. And then this really sells off, and that's it. Panic. Yeah? What if DAX crashes again? Well, this should hold. If not, then it's all gone, right? Now, moving on um, to the US 32 Dow. And obviously, as I said, in February, I was prepared for the potential drop, which actually occurred. Now, during the live webinars and the content that I'm actually sending your ways, guys, I mean, the October drop has been in the menu, right? Now, even right after that, obviously, I fed you guys some more and more, right? So it did do what I said previously, that it could actually breach this trend line, and it did. Now, the only question is, what type of sequence is this? Because this is a simple move, and it can also pass as a triangle, to be honest with you right here, okay? And this is the end of it, but it's scary because it means that the all-time high is like a bit further away. So what am I trying to say? I'm trying to say the following thing. This could be either an A, yeah, or a a 1. If it's a 1, it's not good because let's say A and then B right here and then the C wave. So this could actually pass as as a larger degree A in a more of a bigger type. But this could mean that this B wave could develop in a larger amount of time, like here, okay? And then, however, let me leave you guys with something scary on the Dow Jones, because if this is indeed a 1 and this is a 2, and then this is the start of a bearish sequence, 1, 2, 3, A, B, C, 4, bumping its head, boom, right? It could actually happen. For this, well, what I'm gonna do is I'm just gonna jump on the SPX just to see how the structure looks there, right? On the S&P 500, and it also broke the trend line right there, and this actually stopped at the 161.8 of this swing. Typical Fibonacci extension for a wave 3, which I'm labeling right there. Interesting. So it could be, in either case, uh, more weakness could actually occur. That's what I'm trying to say on the US indices. Asian indices are, let's say, they're a mess. I mean, compared there's a there's something that I'm seeing on the Asian markets, um, and what I mean by that is a very large degree expanding flat. For instance, on Nikkei, you guys can check it out. Go to the weekly chart and see it. And most indices they actually point towards that possibility, including FTSE. So yeah, Nasdaq is in a different league. Um, the structure is indeed, let's say for instance, a little bit different right there. It completed the wave 4 right there and the ending diagonal in the 3. So this could allow more complexity within this 4 corrective structure. I'm labeling that as a ABC. So W right here, complex structure in this X, and then it um, should be like this. So this could be A, yeah. And wait a second. Okay, and this could be a B wave, for, but thus possibly preparing for more. So we'll need some more time, right? It's too early to tell. But on the um, let's say Nasdaq on the 4-hour chart, does show a possible corrective pattern and possibility for more upside short-term wise, right? So we'll see how this after this actually happens. We'll see how this looks. If it looks like this, then you know it could point out to more towards more downside, much more downside. So yeah, that's basically the reason behind it. So let's do a recap right here. What did we do today? Today we successfully forecasted, made a technical analysis and successfully forecasted the NFP release, the non-farm payroll. This is the first NFP of the year. US dollar had a good start of the year when it comes to the actual data release, so almost double than the actual forecast behind it, right? But that doesn't necessarily mean that it's um, going to go bullish and all that. As I said, for the trend to actually be decided, what the US dollar should do, it's people should, investors would most likely digest what was released, the data, and the reasons behind it. So I do believe that this is, let's say for instance, today is Friday. I do believe that the actual trend could reveal itself further along the line, possibly Monday or uh, a bit after that, let's say Tuesday or Wednesday or something like that, right? So as I said, right, um, would be inclining towards that actual possibility. Okay, so uh, for instance, would like to see how this thing develops on gold, how this corrective structure develops on silver. Yeah, if the crude oil decides to rise from here or just breach this, and by the way, the invalidation for the rise, in my personal opinion, could be 44.20. Um, Now, for the euro, the same thing, must not breach levels I previously mentioned, because if it does, it's quite bearish, and I don't know, it's just a bit more complicated. The euro is looks like it's in its own world, and the pound dollar is as well. But there is still hope for them, and you guys know the forex market and how these things work. It happens when you least expect it. Basically, it happens when we're sleeping or something like that, right? When you're not there, you either know about it or it's just like you don't know what you're doing. So that's how it works. Now, yeah, just to leave you guys with something here. Let's say if let me see it. Okay, you're welcome, Yanis. Okay, yeah, you guys are quite or practically looking at the charts most likely. Anyhow, what I wanted to leave you guys with today is the following thing. If you like the way I'm labeling the charts and all that. If you would like to learn, there is some material available in the actual room. So for those of you who are inside the webinar, just you can easily download some ebooks, 4 parts, which include the corrective structures and complexity behind them, explanations, sequences, where they appear, rules, guidelines, and so on. So much stuff, so much educational stuff on the analysis, which I'm actually doing here. So if you guys want that, you can download it inside the actual room. Okay, so that's basically a giveaway. It's free, don't worry, guys. Now, another thing is next, I'm planning on doing a macro perspective webinar in which that question will be expanded, the one which I've basically started this webinar with, the big one, the big questions, the big question, sorry. Is the market ready for the market crash? Are we already in it? Are we going to prepare for it? What's going on? Where are we located? What's the actual location for the current cycle within this within the within this bullish market? Has it ended? No, is it continuing? What is going on, right? So yeah, is the market crash coming or are we already in it? Something like that, right? So the webinar will be based on a macro scale, on a macro perspective, in which I'm going to pull up some long-term charts, just for me to expand with you guys and tell you guys what my view, my personal view is, and what I think the market could be going for a long term. Thus, probably potentially preparing you for um, you know for them for those swings to be on on the right side maybe. Yeah. After other than that, I do not want to keep you guys more. We stayed for a full hour right here. I would like to thank you very much for attending this webinar. Hope you enjoyed it. If you did, please leave your feedback. If you're watching this recording later on, please give me a thumbs up. Thank you. Okay, and yeah, just support this playlist, guys. I mean, the more you want, you can give your feedback. If you want more content like this, not only webinars, but more content, just send me a message or provide your feedback in a comment or something like that. So, yeah, thanks a lot for watching. Um, as always, as I like to say to all my traders, until next time, stay in the green and many pips ahead. Bye for now.